Hey guys, welcome back to another Trading Edge video, your weekly look around the markets. Before we get into the charts today, I want to share with you some awesome news, and you probably guessed it by the title, but we're excited to announce that we had another one of our Tier 1 members get funded. And this is pretty exciting news for obvious reasons. This is a dream come true. This trader has been working on his craft for 6 years in total, 2 years here with Tier 1 trading. It's cool to see all that hard work pay off. But more importantly, or more conveniently, it also follows up directly on what we talked about last week. And if you're paying attention to these videos, if you're tuning in and week out, then you know that last week we talked about really debunking some of the myths that the internet tells you about success in trading, and how having a proper perspective, having a proper sense of the reality can help massively as far as not only being patient about your learning curve, but to avoid being discouraged and losing confidence. And we talked about how, you know, the internet will often make it seem like you can be a successful trader in like a week or, you know, a month, and you can take this $1,000 account and turn it into $1 million in a year, funny stuff like that. And the reality is that learning how to trade takes time. You know, Adam Grimes often says it takes about 3 to 5 years. We typically say once you learn how to trade, it takes about about 1 year to about 18 months. So anytime between 1 and 2 years. I know Mike Bellafiore will tell you the same thing. And this just gives it more proof. Not only that, not only the time that it takes, the investment that it takes to become good, but what the reality of an equity curve looks like. About a month ago, I did a video here on YouTube and on the platform as well, obviously, talking about the reality of a equity curve, and how it looks very similar to a trend where it goes up and down and up and down, and how success in trading doesn't just look like a straight line from the bottom left of your screen to the top right. It is a battle, it is a journey, it is an experience to say the least. And one of the cool things about this trader as he was going through this challenge, and it was a two-part series that he really took on since the summer, was that he saw all parts of that equity curve. He saw the times where he was on fire, he saw the times where he was on a funk, and because he had confidence in himself, because he had confidence in his system, he was able to fight through those and ultimately reach his goal. So that was awesome news. Hats off to you, Cody. I remember when you shared it this Friday on the platform, we went nuts. I was going crazy. I know the traders on the platform are motivated. They see you each and every day in the live room and on the chat, kind of being an ambassador to the newer traders and just how hard you work. And it's personally motivating to me as well. I know like it shouldn't seem that way because I'm the coach or whatnot, but this is the reason we do it. We get that funny type of, you know, chicken skin feeling every time you see people kind of take steps towards the next part in their lives and start to fulfill their dreams, and especially when it happens to deserving people who really worked hard for it. So if I had a hat, it would be hats off to you, man. Keep it up, and I'm glad that you're still going to be a part of our program and, you know, be a good example and a good role model to the younger traders that come on and try to do the same thing as you, and that's pretty cool. So one more thing before we get into the charts. I know I say I'm gonna rant quickly and then I go on forever. I was talking to my buddies and my partners the other day. We may or may not be planning for another event at the end of the month, right? But we got on the conversation about what to talk about and just the overall environment of the world right now. And if you've been following us for any time, we talked about this past year, 2020, although it's been full of absolutely horrible stuff and kind of new stuff to everyone. From a financial standpoint and an investing perspective, it has been, you probably couldn't ask for a better time, right? Every time you see these recessions or recessionary type of environments, basically you're getting easy pickings in the investment markets, in the financial markets. Everything is being sold at a discount. Nothing has really lost a tremendous amount of value, at least your blue chippers, your good indexes, your good stocks. So you can basically buy double or even triple of what you would normally buy. And you know, you'll pay for that, or that will pay off years in the future. And we're talking about, is this the end? And you know, we just had I guess the official declaration of our president today. We'll see what happens with the lawsuits and whatnot. I don't think they're going to go anywhere. But we're talking a little bit about that, a little bit about, hey, once we get the presidential election out the way, is the market going to pay attention to, you know, the COVID pandemic, the stimulus, all this other stuff, and what's going to happen to the financial market? And I think overall, we think that we're still going to be in a situation where it's going to be a very good opportunity for people to find some very great investment opportunities. And the question is, are you going to be prepared for it? And the cool thing about Cody and him embarking on this journey, it's very similar to me, right? When I first started trading, or not when I first started trading, when I first started taking my trading seriously, I quit my 3 jobs, right? And I don't advise that. It was stupid, but for me, it was what I needed to do to kind of put my back against the wall, to create a sense of urgency and really go all in and dedicate myself. And I was young. I didn't have a lot of, I didn't have a family or anything like that, a lot of bills or responsibilities. So I was able to take that risk. I had time, even if I failed, to kind of rebound in whatever my career path would be. And this past year, 2020, has been like that for a lot of people for different reasons, because they've either been laid off or furloughed or working from home. A lot of people have found 2 things. One, a massive amount of time on their hand that they didn't have before. And 2, the opportunity, or I guess maybe not the opportunity, but the sense that they're not as safe as they thought they were, meaning that the safe, comfy, cozy job that they thought they can just ride out forever maybe wasn't as comfortable as they once thought it was. And it's a little bit of an urgency where it's like, well, I have to take control over my life, my investments, my financial situation. And a combination of those things really encouraged people to do things that they wouldn't have done before. And Cody's one of those examples where he had the time, he had the opportunity to really embark on something, and he was prepared for the moment, and it paid off. So as we approach 2021, hopefully things are better, but I think we're still going to see a lot of those opportunities moving forward. And the question you need to ask yourself is, are you prepared to handle that situation? And if there is something that you want to shoot for, is this the time to really kind of go all in and go for it? And I'm a big fan of doing that, but that's going to be a question that you're going to have to ask yourself. Anyway, enough of the ranting. Let's head over to the charts. Before we get over there and I show you this disclaimer, do me a favor, hit that like button, hit that subscribe button. If you have any questions throughout the video or questions in general about anything, leave a comment below. I read through each and every one of them. I will respond. And many of those comments become episodes of my Trading Coach podcast, which is one of the most popular Forex and trading-based podcasts out there. So hope you guys enjoyed the video, and I hope you guys have a great rest of your weekend. All right, traders, we're going to start off on the Euro Aussie this week, and I believe that this is the only Forex pair on my radar for the week ahead. I may double check that, but I think so. And like many pairs, you can see it's been a busy week. We've had a busy week across the board. Obviously, the U.S. election has been the #1 news event on the radar. But underneath that, there's been a lot of other events that have kind of gone under the radar as well, such as quantitative easing, such as more talk on negative interest rates, coronavirus spikes, UK lockdown, all that fun stuff. And the markets have just been kind of whacking. I think this daily chart on the Euro Aussie says a lot about how the markets have been. Give me a second to zoom in. You can see the types of candles we have, the type of wicks that we have. If you're new to understanding a candlestick, the body is essentially the open and the close. So the filled in part, that's the open and the close, where the session begins at and where the session closes at. The candlestick, or the wick, right, the line that you see, that's going to be the highs and the lows of the session. So you can see in a candle like this, although we opened right here and we closed not too far ahead of it, during that session, we actually made a very strong push up, only to come all the way back down. You can see we did that a few times in the row. And it's one of those interesting situations where, as you go down to a lower time frame, you're going to get a completely different look at this chart than what you see here in the daily. And it's more of a consolidative look. And if we bounce down to the 4 hour, the hourly, let's go down to the hourly and look a little clearer on here. You're going to see, again, those up and down days kind of transform into something that looks more like this up and down action right here. And if we put all of that together, you should be seeing, I'll give you guys a chance to kind of guess if you see it first. You see anything here? We should be seeing a potential advanced pattern formation. This is going to be in the form of a potential bearish cipher. This first move right here is going to be our X to A. This is going to be considered an anchor leg because we technically don't break and close the previous level of structure looking left. Again, it doesn't matter whether you want to use anchor legs or impulse legs. Typically, impulse legs are going to be a little bit easier for newer traders to identify. Impulse legs are going to be ones that break structure, so those swing high to swing lows. But anchor legs work just as well. We just want to see those direct, I call them sore thumb moves, right? So we have our initial X to A right here. Our first retracement is going to be our A to B. We then extend down, giving us a valid B to C. And currently we're retracing the B leg right here. If we were to violate this B leg and move further, that would put us in the position. Give me a second. I think I chose the wrong level here. Is this our high? Is this our high right here? I think that's our high, actually. Here we go. If we go past that B leg, if we violate that B leg, we're going to be ready for setting up for a potential bearish cipher pattern, which is going to complete at the 786 retracement from X to A. So right here at this 164.42 mark. And of course, the zone goes all the way from there to the X leg. Now, what's interesting about this, if you're someone that likes taking pattern formations and maybe using them as a reason for bigger directional moves, for example, you may want to check out the daily. We're in retracement mode, pullback mode on the daily. Again, we just broke a previous level of structure support here. You can see that we've pulled back into it. We're trading at current structure support, but we can go a little bit lower, right? We could go, I wouldn't be surprised, I think we talked about this weeks ago, I wouldn't be surprised if it went down to 62s or 61.50. So if you're someone that likes to hang on for a little bit of a position, maybe look for a bigger move, I don't recommend it, but you can go for it, shooting for a little bit of a larger extension down there as well here on the Euro Aussie. Next, we're going to head to the NAS 100, and this was, gosh, I don't remember what we talked about week in and week out. We might have talked about this last week. If not, we're going to do it again. I know we talked about it during the live rooms. We talked about it during last week in our tier 1 trading sessions. I kind of forget what I do on YouTube, just because it's only once a week. But if this is a recap, it's a recap. But this was our prediction for last week, right? We had a triangle pattern setting up here on the daily, and typically triangles are, not a big deal. They are symmetrical triangles and whatnot. They are neutral patterns, meaning there is a chance we could break out to the upside, a chance we could break out to the downside. There's no real edge in the market. But as I often say, right, it is not the what, but the where that matters more. And when I say that, it means that the specific pattern isn't the most important thing in the market. So the double top, the head and shoulders, the this, the that. I think too many newer traders, including myself, we get caught up in trying to figure out what to trade instead of figuring out how to trade or understanding that the where is most important. And when I say the where, what I mean by the where is the overall prediction. So we can take this triangle pattern, which has if we're asking ourselves, is this supposed to break out to the upside or the downside? We say it has a neutral chance, right? It could be one way, it could be the other way. In its own right, we don't know. But then if we take a bigger look at the market and do some real analysis and ask ourselves the question, based on what this market has shown us, do we project a continuation in one way or a reversal in the other way? That's going to give us a different story. You can see, like many indexes, right? The overall trend is going to be bullish, right? Strong bullish trend, strong bullish trend, strong bullish trend. We have 0 types of violations. We've put in recent new structure highs, and now we're caught up in a little bit of a consolidation. Now, this little bit of consolidation is going to be no different than a breather. And for you guys to understand, like pennant patterns and flag patterns on that fun stuff, same type of concept where we've had a very long, strong directional move. Now the market's kind of consolidating, making up its mind on what's going to happen next. And well, when you see something like this, it adds kind of not proof, because we never know what's going to happen, but it adds, I guess, importance or adds a directional bias. Let's just put it that way. It adds a directional bias to the pattern. So we're still looking for bullish breakouts here. You can see kind of the notes again. It doesn't mean that it's going to happen. Who knows? This is a crazy time in the world. There's a new president, maybe. We still don't know yet. So there may be some lingering effects in the market because of that and other things as well. New coronavirus outbreaks and all-time highs and all that fun stuff. But from a technical perspective, this is something that I'm looking for a bullish breakout. You can see last week when we were looking at down here, we already made that reversal down at this point. This is going to be one of your first chance entries if you wanted to position yourself kind of prior to the break. This thing may continue to coil for a little bit longer. If it does, each time we hit that bottom trend line, it's going to be an entry. If not, you guys have been following long enough by now, you know that there are 2 other ways to enter. One is going to be during the break on the upside, and the other is going to be waiting for the break and waiting for the first retest. So your classic pullback type of trade. Next up is gold and silver. We're going to do these pretty quick, but we have two advanced pattern formations here. One has already occurred on gold, but it's still it's close enough to the entry that it still may be kind of in that range for you on the open. And the other one is silver, which is kind of lagging behind gold right here. But nothing fancy here, right? Simple consolidation, right? Markets in consolidation. We know that when we're in consolidation, what do we typically see? We typically see advanced pattern formation. So this one specifically is going to be a Gartley. It was actually a bat at first, and then it ended up transforming into a Gartley. But they both complete essentially at the same place. You can see that 127 is right around at 886. So looking at it, X to A to B. Right, X to A right here, another anchor leg because we don't break our previous level of structure looking left. A to B is going to be this retracement right here. Initially, it was down here. We had to adjust it. This is going to be your B to C, and then your CD completion right up here at this 127. And once, just like the cipher before it, D completion, if you're an aggressive trader, that's where you're putting your limit order for a sell. If not, you're measuring out this zone, and you're looking for your reason for entry within that zone. If we bounce over to the other shiny metal real quick, silver, you can see same type of setup, almost identical, a little bit different. This is going to be an anchor leg, not an impulse leg, because we do break structure. It's a little lagging behind, but same thing. We're setting up for a potential Gartley pattern. This one's going to be at 2661s. Same type of deal. Bearish opportunity right here. Your zone of completion is going to be from that 127 decompletion all the way to the high of your X. You're looking for a sell here. Lastly, we're going to take a look at Bitcoin. And this was, you guys know I rarely look at Bitcoin, but when I do, I'm typically pretty accurate with my predictions. But we looked at this in a live room on Thursday, and this had an interesting situation. Now, first and foremost, we had a great lesson on nothing is a perfect setup, but how a really, really, really good setup prior to didn't work. And what we were talking about was this ascending channel, right? If you look at this right here, this is called an ascending channel. You can't really see my RSI because I've somehow buried it down here. If I get rid of this ATR, there we go. Ascending channel, right? We had the market showing us, or the RSI, Relative Strength Index, giving us divergence. And this came right at a previous level of structure, if you can imagine looking left. So an ascending channel, this is typically a sign of relief, right? You have an aggressive or high momentum bullish move, and then the market kind of bends out, and then you start to see usually a little bit of relief, and that never happened here. So again, I love talking about examples that don't work because I think it provides reality. I think too many books, particularly too many YouTube videos show a lot of hindsight trading. They only show you stuff that works after it works. And what happens is, as a newer trader, you fall under the impression that everything works all the time, right? You fall under the impression that, hey, this is the perfect setup. Whenever I see it, it has to work. And then what happens is when you go into the market and it doesn't work, you start getting discouraged. Either you start losing belief in the setup or you start losing belief in yourself, where I must not be doing it right because Ed on whatever trading forum just took another one and that one worked. And all that does is it damages your confidence, it damages your psychology, that whole belief, action, result cycle that we talk about that is needed for success, right? Starting with belief, it never gets going because of that. So I always think it's important, when we're doing our live room sessions, to show our traders all of the opportunities, the good, the bad, the ugly, right? I showed you guys Cody's equity curve earlier from the latest challenge that he just completed, right? Is that what you would expect for someone that's working for a prop firm that just got funded? Probably not, right? You would expect, won every single trade, but that's the reality of it, and that's okay. It's important to know that as a trader, and I think we've done a good job just in our years of teaching, of kind of projecting that reality across the board and making it more comfortable for people to talk about. And when I first got into education, no one talked about losses. No one talked about anything negative. It was always win, 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 double my account, double my account, double my account. And I was one of the first ones coming out, basically saying how much I sucked and talking about the bad. I had a blog, and that's kind of how I don't want to say I got my claim to fame, but that's when people started getting attracted to me, because I was that guy blogging every day about how hard trading was and kind of the reality of it. And it's just pretty cool to see so many people come around and the other traders and coaches that have been doing that kind of get more respect, and instead of kind of feeling discouraged about talking about that type of stuff. So always like to show this. But it broke to the upside. Now we're starting to consolidate and we're looking for a continuation. Now this is important, right? And we didn't get this on the end of the close of the week, but if we would have gotten a lower low, lower close, and if we do get a lower low, lower close below this doji, so below this line right here, that's going to really invalidate any sign of looking for a long breakout. Now we can always pull back. That's going to be a different type of trade, pull back and extend. But as far as like a breakout trade, and you'll see that when we go down to like a 4 hour, see how we're consolidating, right? Another type of pendant pattern right here. If we were to violate that line, that would get rid of any type of breakout. So I guess to back up, because I'm all off track now with that little rant, let's do our IPDE and let's go out to the weekly, right? Identify, predict, decide, execute. And we want to identify that Bitcoin has just broken past above a previous level of structure, right? So we can predict that we're likely to continue higher. So if we're likely to continue higher, the next question is, where are we likely to continue higher to? And you can see that we have a nice little level of structure lining up on over here. Now, something else that we also have is this, right? If we kind of take our tools out and we do a little measurements, give myself a little bit more real estate. If I take this move right here, swing high to swing low, right? You're going to see that the retracement comes to a 618. We know that a 618 puts us on alert for a Gartley pattern, so we're actually going to have a bearish Gartley pattern right up in this level. Now, this isn't necessarily important for looking for shorts. Obviously, it is a valid pattern formation. You could look to get short here if you want, but we can also use this in our overall analysis of how we're looking for this potential long opportunity, right? If we know where that Gartley completion is supposed to be, it kind of gives us an idea of where we would expect price action to go, and maybe instead of looking for it to go all the way up here, right? We can aim a little bit lower, a little bit more conservatively with our targets. And that happens to line up really with the first level of structure looking left. And I say first level of structure because, again, if we zoom in here on the weekly, you're going to see that we really have two levels of structure, right? We have the highs right here, but there's this little bit of a kind of a pullback type deal before that where the market came here, created a lower level of structure before going lower. And I do want to take that into account. And if we go back down to our daily chart, we're going to see, and I'll just kind of delete the rest of the junk I have on here, making things way more confusing than it needs to be. You're going to see that level of structure is going to come right here. So I'd be interested in aiming at this level as a first target. There's nothing wrong with this higher level, it's just a little bit more aggressive, but below 18s would be a target level for me. And now I want to look back and see where we're at trade-wise, and that gives me plenty of opportunity, right? If we look at where we're trading right now, I know it seems like we're right on top of it, but there's actually plenty of room for opportunity to go higher. If we do get just a breakout, right, you can see that we're looking at a situation where our risk reward is going to look something like this. Let's just say you get in somewhere right here, right? We know that the risk we talked about earlier needs to be below those lows. Here's your highs right up there. In fact, I'll even say, let's just see something real quick, see how well this lines up. Fibonacci extension, swing low to swing high. I don't think we're going to line right up with anything, but yeah, 1414 right in the middle. You can even aim a little bit lower if you want to be cautious for a 127. Either way, you can see it's a very good risk reward, a 2 to 1 to that 127. If we're going up to the structure level, you're almost at a 3 to 1. Very good risk reward there. So again, it doesn't seem like much when you look at the real estate on your chart, but there's actually a lot of room for a bullish breakout here. Another opportunity would be this. If we do kind of get some relief, then we're looking for our classic pullback trade, as we mentioned earlier. So we're looking for price action to pull back into our previous level of structure right here. It's going to be a little bit more difficult with stop losses because we don't have a clear base. So hopefully we're looking for some type of entry reason, right? Let's just say a double bottom, for example, and you can base your stop off of that. But then you're looking for that. My first move would be a retest of the highs, just always conservative. And then that secondary target could be that bigger extension target. So cool things happening here on Bitcoin. Again, we don't look at it a lot here. But we're just doing a kind of a random walk around the market, just a random walk. That's an interesting term to use, Akil. We're looking at just doing a random kind of tour around the market, looking for opportunities to bring you for this week's Trading Edge video. And this is actually one of the top ones on my radar for a technical or from a technical perspective. All right, guys, I hope you enjoyed the video. Once again, before you leave, do me a favor, hit that like button, subscribe if you're new, make sure that notification bell is hit. That way you don't miss our next video. You're gonna want to stay in tune with the channel. Again, we may or may not have an event coming up at the end of the month, and you're not gonna want to miss it. So make sure you're in the loop, make sure you're up to date with what we're doing here at Tier 1 Trading. Also, must listen podcast episode for you. I told you last week that Jason Graystones was doing kind of a investing and trading related series on his always free podcast, starting off with me as a little bit of a warmer upper, an appetizer, and then following up with some great gurus in the industry. And this past week he interviewed Dr. Brett Steenbarger and Mike Bellafiore at the same time. It is one of the most amazing conversations that I've heard about trading, all about trading, not just like technicals, not just fundamentals, not just psychology, but all inclusive about what it takes to be a well-rounded trader, the stuff that really matters. So I recommend listening to that. Do it. Trust me, it will not disappoint. And I hope you guys enjoy the rest of your weekend. I wish you guys a very great week of trading